What's up, guys? Welcome back to another episode of 0xResearch, to another live stream of 0xResearch. Today, I'm joined by Danny, not from the research team, ex-research team, now doing full-time pods, and Shonda from the research team. Hey, guys, how are you both doing?
Doing well.
Very good.
Doing great.
Very good. I guess before we get started, I have a very detailed topic list for today. But before we get started, how are you guys feeling about the market? I will also say before we get started, never mind. You guys go. How are you feeling about the market?
Everybody's talking about metals.
Love it.
That's talk of the town: silver and copper and all this, and copper dog meme coins too. It's weird.
Yeah, I mean,
Yeah.
I would say, like, in general, overall, I'm still playing it pretty defensive, not trying to take too many risks. But actually, today I added to my high position for the first time in a while, and took a pretty good.
After it went up 25%?
Yeah, okay, so the thing is, I was planning on buying, but I didn't have my ledger with me. So
That's fair.
I came back today. It was the first time I had my ledger, and yeah.
That's fair.
But
That's
I mean, the thesis is I feel like a lot of the selling pressure was just that like one Tornado Cash entity, right? And sold over like 9 figures of hype. And you have the sell pressure, but you also have the fact that it was super telegraphed. Everyone knew about it. No one wants to step in when he still has like 9 figures to sell. Now that that's cleared, I think like 20 could be a pretty obvious bottom in hindsight.
Yeah, I think so as well. I'm just gonna share this over here. It seems he's now out of tokens. He's only holding Latina, worth $8.80. This is like based on an MLM tweet. I think it seems he's offboarded most of it to Arbitrum, but almost 20 days ago. I wonder if I'm sure he has multiple wallets, but this is just the first one that I could find. Yeah, seems he's sold. I do think that was kind of like very telegraphed, and I imagine a lot of people are waiting for him to be done selling. On the copper and silver end, Danny, it is definitely interesting that a lot of like the people that I knew, who I tweeted about this morning as well, a lot of the people I knew who were like maybe even back up to like a year ago, I remember one of them tweeted to me, messaged me and said, "Oh, like, do you see these wallets buying Digidaigakus?" I don't know if you guys remember what Digidaigakus are. Oh yeah, like the Gabriel Layden NFTs. Versus now in that same chat, people are just talking about whatever emerging markets, lithium, copper, silver. it's a very, very like intense shift away from who I would have considered being like exceptionally crypto native, to the point that I would have imagined they would only trade crypto assets, to like a very stark shift towards trading all assets, and like trading less and less of crypto assets. I think a lot of people also got burnt on some recent crypto launches, crypto token launches, especially like Lit. I would say burnt some people. But in addition to that, I think also like the market's been relatively unforgiving compared to metals, where some of these things are breaking out of like 30-year consolidation, and also they seem to not stop going up. My brother was buying silver, and then it went up to 80, and I was like, you got to start selling somebody. And he was like, no, it's fine. Now it's at like 108 or something. So I don't
You
know,
know,
like that's a much better market to be part of than it is to be like part of crypto.
you know what this rotation reminds me of? Like people now longing uranium copper. Is like the Bitcoin, like back in the day, it was like BTC pumps, then ETH pumps, then altcoins pump, right? So we had like, okay, gold is pumping, now silver pumped, and now the rest of the degens are just gonna flood in the market and long whatever heavy metals they can that has just like the least liquidity and they can size up.
Yeah, I will say like crypto market dynamics are very. I imagine like people who trade traditional markets regularly are like, yeah, obviously it's the same. But I agree with you, Sean, that it's like pretty interesting to see value also, like not value, but investments flow down the AI stack. Like very clearly it was Nvidia and whatever, and then people started longing storage, and then now people are longing like whatever chip materials and shit. So it's very like that waterfall effect is not just crypto, which I imagine like everybody knew but me.
Yeah, and there's an upside to equity markets in that you have equity rights, shareholder rights. So there's less of a concern about your stock going minus 90% like the week after you buy it. In some cases, it might still happen if it's like a pure shitter thing, but you probably don't need to worry as much on the typical equity play as you do on the typical token play.
Yeah, definitely. Especially if you're like not buying what you said, which is like if you're buying pure play junior micro cap copper miners, I'm sure you can lose a lot of your money. But if you're, well, I actually don't know much about the copper.
Maybe the interesting point as well is like if you look at some of the assets too, like a lot of the larger crypto assets are large enough to where you might be looking at. I mean, take HYPE for example. It's whatever multi-billion, even what
25 billion
tens
FTV.
of billions FTV. I mean, you're looking at small to mid cap stocks, so it's in the return profile. If you are bullish on a small to mid cap stock over the next couple of years, could potentially be similar. So I think it's unsurprising to maybe see people looking more broadly, especially as well now that this thesis of like come trade everything on chain. It's not just like trade dog shit. Now it's like you can actually just trade real businesses on chain too. It's merging those worlds a little bit as well.
Yeah, I guess like maybe if we want to talk, I know we want to talk about BITGO first, but I guess maybe kind of relevant to this, we can talk a bit about what we're seeing over on HIP-3. I know we already covered this like 2 weeks ago, and I've probably mentioned Hyperliquid every week since I took over the podcast. But I think this is pretty interesting, like the amount of volume that is now going through these HIP-3 markets. Specifically, there we go. Like, I don't know, now it's at 2.23 bill today, and that's out of 19 bills. So it's like above 10% of volume is on HIP-3 markets. And a large portion of this is XYZ, and I think it's mostly, 1.4 billion silver. But also like daily OI is also climbing. So it is pretty interesting given like for a really long time, the thesis was financial nihilism and like meme coins are going to drive volumes going forward. I think Pump kind of did a comeback, and they're actually doing quite well. Like just anecdotally, I'm seeing more people post stickers in chats, which I think like always implies that Pump is probably above 2 mil revenue again daily. I haven't checked, but I'm sure it is at this point, like today, post Penguin. But it's also more and more people are trading, I guess, assets that can't go down 80% in a week on chain, and it's doing quite well. Like, I know it's kind of stupid to do hindsight analysis, but I imagine the hype thing is post Jeff's tweet about HIP-3 OI, right? Like it was at 800 mil or something, which is very significant. Like it's higher than a lot of perp dexes, and that's just silver at this point.
Yeah, I mean, I feel like in the last 24 hours, silver is the second most traded market on Hyperliquid, like even above ETH.
Yeah, it's pretty crazy. People just, if you just give them the venue to trade it in and you don't make them do KYC, they will just use your platform and 30x long random stuff. And I feel like that's always kind of been the bull case for Hyperliquid. And I saw, Sean, I don't know if you saw this, but I saw Charlie from Felix post an article about spot assets and how they're thinking about it. So I think spot assets are also relatively soon, like they'll come relatively soon. I don't know how much volume they'll do realistically. Because
Yeah, I mean,
spot
I agree with you. I feel like spot assets generally tend to do less volume because you would assume people just buy and hold it, right? So you don't have that much like turnover. But in terms of like allowing some more arbitrage between the spot and the perp, you can make the markets more liquid.
Yeah, that's true. I don't know, Danny. Do you have any takes on this? Like more and more stocks coming on. Like, how do you think other chains are positioned for this? Or Sean, to you as well.
Maybe something to consider here in the growth path is like this might be sort of like a spiky event. If the assumption here is that like the silver and metals activity kind of drops off, like I don't know, I'm not a commodities expert or anything, but is this like a blow off in activity for silver trading? I saw Balchunas tweeting about the silver ETFs like heading record high, like 40 billion trading activity the other day. So for HIP-3, like it's great. There's some validation that people will trade on here, but if the metal stuff cools off a bit, it's like, is it going to be a slower climb from here? Like you don't want to sort of over extrapolate into the future, the growth that we're seeing this past week. If it's more of like a one-off, speculative kind of bubbly activity of this one particular group of assets and not representative of like the true growth rate.
I mean, that's always an issue with everything, right? Like, yeah, I can imagine. It just is positive that crypto natives can immediately switch from trading Bitcoin, ETH, XRP to silver, copper, NVIDIA on this one platform. Another issue here is I think because it's growth mode, Hyperliquid revenues are actually 90% lower. Shonda, correct me if I'm wrong, but they're like significantly lower. So it's not actually benefiting the protocol that much right now, but it is good that people's first thought is like, oh, I can just long silver on this one thing.
Yeah, like I said, I think it's a good data point. I guess what I would say is like, if you're building your investment thesis around this thing, don't calc the PE today on the volume from last week and use that as your basis for the go forward, because you're probably going to lose a bunch of it. And the actual growth, 6 months out might be a more conservative than that. I think we tend to do this, like even if a lot of the Solana activity, like post-election in 24. It's like you look at Pump Fund from then, and we needed to cool off quite a bit from that peak of activity as well. So
Yeah, I mean, like if you think about the way deployers are incentivized to choose their markets, I agree with you that they're always going to choose the markets that at that moment are like talked about a lot, have a lot of mind share, have like volume that is probably disproportionately high to what they would normally have. So I agree with you. A lot of them are going to trend down, but I think it's important just to show that like you can capture that demand even if it's just in the moment. And every month, like the flavor of the month token is going to trade, be it equity, be it metal. But Hyperliquid can probably capture that volume at that time, right? And then even if that drops off, as long as you're positioned to list the next market that's going to have a lot of demand, you keep like building out these markets, and eventually you have a lot of different pairs.
yeah, I think like Pendle is actually an interesting comp to this, like how their growth has been, because there's been like these different seasons of activity. It was like, you know, ETH restaking stuff, and then all the USDE growth, and they've had like kind of like a couple different seasons of different types of assets that have all sort of like kind of validated the use of the product underneath, but the growth has been incredibly lumpy as a result. Not to say that like it's you know not valuable, just more so the point that like if you're expecting up only candles until you know 6 months in a row, it might not actually happen that way. The activity is probably bound to be spiky just due to the people that come and trade these assets. It's speculative, and so it kind of there's booms and busts.
Yeah, I think that makes sense. Especially like the Pendle example, I think is very good. Like you said, they had the points programs early on, with primarily restaking at that point. And then they had US. They've always had Ifina, to be fair. USDE, I think it's like their most popular market of all time. And then they had Kinetic K Hype. And they are also doing okay with like USD AI stuff. So like just generally any form of vault product or digital dollar tokenized thing that has a yield attached to it, they can benefit from it. I mean, it's just like a picks and shovels thing now, like, but except for a thing that doesn't die out for 8 months at a time. It's you can just constantly adapt to something. Dexes are fantastic business, and Pendle's also like at the end of the day a Dex business. I think they make most of their money from their swap fees, although like I'm sure River will call me an idiot if I'm wrong about that. But and like anytime like it's adjustable to not adjustable. It's like applicable to any asset that comes on as long as the team is relatively smart about it. You can just clip bips. There's no better business than clipping bips. And it's crazy that only Dexes can do it. Nobody else can do it. I guess lending. Yeah.
Yeah, I guess like there's one more thing that I wanted to say because I just checked it out. I think you can make the argument that the growth mode has like definitely boosted volumes, and a lot of volumes are people farming. Like I think I saw analysis like over 80% is just it's not necessarily farming, right? But you're just creating maker volume through like bots like ThreadFi, trying to get as much volume as you can for points. So I think the fact that Silver is doing a lot of volume now is indicative one that there is actually demand for assets that people are trading and not just farming. Otherwise, you could expect that they're just like uniformly providing liquidity for like the top equities. And second, Felix's Silver actually does not have growth mode fees, but it is still in the top 10 assets by volume today, over 77 mil.
That's pretty good. Felix must be making a lot of money. Well, 77 mil is not a lot, to be fair, but it is very good that they're seeing a lot of.
Talk to me about that. This is something I have questions about, like not constrained to Hyperliquid, like all ecosystems that are sort of like onboarding these, you know, real world assets or equities. Is you see a lot of issuers kind of come into the fold, and I don't know if it makes sense, or like if the smaller issuers like really have like how do they really compete here if they weren't maybe the first mover or like the strongest brand to enter in. What is the thinking there? Because I think you see this, like if I look to Solana as well, it's like there's like maybe 4, 5, even 6 different like stock tokenization products at this point, and it's just like they're all competing over a couple mil in volume on like, X Tesla or Y Tesla.
Yeah, so like I guess my lazy answer would be just to say that Felix has USDH, which gives it a fee discount. But I think in general you have like two ways not to compete as a deployer, especially on HIP-3 perps. Because like as you said, there are not a lot of people that are listing. If you look at Tesla, I think there's 5 different deployers. So I would say on one hand you have you as a deployer need to source liquidity, work with market makers, make sure that your market is the most liquid and people are going to trade through that. And then I think the second approach, which is kind of like what KNTQ is doing, is if you own the front end and you can curate what markets people are trading through, then you can route the user through your pair, even if it's not necessarily the most liquid. And I think if I look at Charlie's tweets from Felix, their pair on Silver is the most liquid, right? So that's why people are trading through there, even though they have higher fees.
It is very top heavy right now, though, and I don't know how much the fees are going. Trade XYZ is doing a great job at listing new markets, but for example, I think KNTQ has been. We'll talk about KNTQ a little bit later, but I think they've been listing some interesting markets. I haven't touched any of them, to be honest with you, but like I think you either have to compete on fees or cool markets. I'm surprised we haven't seen any like esoteric markets. I know there was the whole Trove debacle with like the Pokemon cards and whatnot, but like ignoring that, like structured products, I guess like you want to get as many like regular tokens out first and then allow people to think about the other stuff. But like there's no like, I don't know, what if I want to long Google, Nvidia, and Meta? That's like there. Surely you can offer a AI basket or something. Can't be that hard. And I mean, yeah, you can build your own one, but it's extra fees.
I think Ventures is doing exactly that. Like they're creating baskets of assets. They have a semis index, a robot index, and a Mag 7 index. But like if you look at the volume, it's done like the robot one has done like 16K in 24-hour volume. I think the problem is like people want to know what they're trading, right? Like I think there's some people that just want to be like, okay, I want a long robotics. But I think more than that, people either have a name that they want to long or like a basket that's standardized, right? Like the S&P. I feel like the more complex it is, the less people want to trade it.
Yeah. They also have some SPY stuff, which is actually not doing too bad. I didn't know. Like 30, 25 mil, not great, but not horrible. I guess moving on from this, I want to talk a bit about BITGO because I actually feel kind of bad for Shonda on this one. For context, we wrote like an internal BITGO report leading up to the IPO, maybe a month and a half ago, 2 months ago. Shonda, can you give me a timeline?
We did it after they filed their first S1, so I had that done by like September of last year.
Yeah. And then I guess like just to start us off, well, BITGO's already started trading, so we can look at that. But do you want to give us like general high-level thoughts, and then we can go from there?
Yeah, sure. Let me give a rundown. I've got some notes here. Just walk through it. Yeah, very prepared. So BitGo is actually pretty OG, right? They started a long time ago in 2000, between 2011 2013. There's over 100K Bitcoin that was hacked, stolen from exchanges and individuals. And BitGo was actually the first to kind of launch their commercial multi-sig wallet, right, for use in institutions. And just based on this, they managed to raise a $14 million round in 2014, which was pretty comparable to the other raises at that time. I think Circle and Coinbase also raised around then, and they raised around the same amount. And based on this, they just continued the path, growing out their custody service. They got the insurance like up to 250 mil for like institutions that want to deposit funds there. They raised from Goldman and other like big funds. And as they did this, they kind of grow their bottom layer of the stack, which is like the self custody, where they just have a ton of AUM, right? I think if you look at the assets on platform now, it's around 84 billion. It's down from 101 bill from Q3, but that's just like the market moves, right? And then once you have this, there are people willing to pay a subscription and service for this custody that you pay, but you want to upsell them, right? So they have like they kind of describe themselves as this triangle. You have at the bottom layer, you have your self custody, then you have your qualified custody. On top of that, you have these prime brokerage services like trading, staking, stuff like that. And then on the top, they have this infrastructure as a service. So that's like what they were doing tokenization with the wrap BTC. They're also doing the stable coins, right? But yeah, that's basically their model of this. Right now, it's primarily staking and trading from the self-custody wallet and then the subscriptions and services.
Say assets under management, that's dollars held in wallets that are using BITGO, right?
Yeah, so assets under management might not be the correct term. The term they use in the S1 is assets on platform. So anyone who has a wallet has funds there. Those are not funds of BITGO, but they're considered assets on platform. Yeah.
And do they have a like? How does that take rate? Like, how are they monetizing? How are they making money on it?
Okay, so let's say you split it first, which is the first layer of monetization. You have the trading. So if you go on BitGo, you can't connect to like dApps, right? I can't take my BitGo wallet and connect to Hyperliquid, but I can exchange and I can trade through them, and they take like depending on my volume, it's around 40 basis points for like the lowest tier, 40 basis points on trades.
Okay, that's not horrible.
Yeah, that's all right. And then they have on staking. So if I stake any assets on the platform, it's the same model as like Lido or EtherFi. They take a 10% cut.
Okay. And do you know if all 84 billion use these things, or is it like a subsegment of that? Like, is the when they say 84, did you say 84 billion, by the way, or million?
Yeah, 84 billion as of Q4.
Okay. So when you say 84 billion, are all of those using some form of these apps, or is this just like they've somehow touched BitGo at some point?
Okay, yeah. So this is interesting. I'll go into another thing of like kind of like let's contextualize how big this funnel is, right? In terms of how many users are there, because it's not just the AOP, it's also the users. They break it down as so we'll just clarify between the retail wallet and the institutions, right? So for the retail wallet, they have 1.17 million users, but this users is a cumulative figure of anyone who has interacted with BitGo since they started in like 2013, right? So that's probably overstating the amount of users by a lot, and the distribution has just gone down. So if you look at the Q3, in Q3 they added 23,000 new users, so anyone that's created an account, and in Q4 they've only added 7,000, which compared to like their total user base of 1 million is very little. And then they have this thing that they call as clients, and they have 5,100 clients. And clients is anyone that has like a business relationship with BitGo, that more than just holding the funds, but it also considers anyone that has a wallet balance of over $1 million as a client. So my interpretation is that like this number has gone up a lot, and it's probably just a lot of like standard users accumulating enough that they're now classified as clients.
Okay. And okay, so just to like wrap my head around this, they have 1 million users, and then these users, if they've at any point opened up a BitGo wallet, they count as users. Like that's like the base level, and then above that, obviously, there's and then if those wallet users also, because I assume you can export your wallet and use something else. If those wallet users have more than $1 million on it, that counts as a client.
Yeah. So the thing is, the client is more of a broad, like a description of anyone that like is interacting with BitGo as a customer. And you can make the argument that like those 1 million people are not really customers because they're just like using the custody service, right? They're not necessarily giving any funds to BitGo. But my argument was just that I feel like the client number could be overstated just because it includes a lot of these users that just have got like a large wallet balance now that don't necessarily have like a business relationship with BitGo.
Yeah, I think that makes sense. And do we have any insight on how much money they're making?
Yeah. So I can just break down the next. So that was the retail thing, and then I'll talk about the institutions. Then we can go talk about like a bit of the numbers. But their second thing is like this qualified custody, which they do for ETFs, which they do for exchanges, which they do for funds, right? Because as a fund, you want someone that gives you insurance, and you also want these like policies that you can use, right? You only want to send funds to whitelisted wallets. I don't want a fat finger and like send $1 billion to the wrong wallet, right? Um, and in terms of that, we kind of looked at in our analysis into the two places where we believe that we would see a lot of demand for these custodians. One is the ETFs, and the other is exchanges. And I think that we saw recently they kind of failed to penetrate the ETF market. Coinbase has a basic monopoly there. They have like 80% of all the ETFs. And also for the exchanges, it's also hard to penetrate because the exchanges are building the custody in-house now, right? They're not outsourcing it anymore. So my view, looking at the numbers, looking at their like descriptions of what these numbers mean, is that this retail side is really struggling to grow. It has a lot of users, but those users are really overstated. 7,000 new users is probably an accurate representation of the demand for a KYC wallet where you can't connect to like decentralized applications. And then on the like exchange institutional side, it's also very hard to penetrate against like Coinbase and these things that are being built in-house.
What do I don't know if you said this. What do their revenues look like compared to where it's priced today? That's what I'm curious about.
Yeah, so if you look at revenues, I'm going to tell you something, and you guys can say if you believe me. Their revenues in 2025 was $16 billion, and they're trading around like 1.5 bill.
So that's like an accounting trick that they're playing, right?
Yeah. I mean, it's not really that they're playing. That's just how you account for stuff with the accounting laws. That so $1 of trading volume, if it's routed through you, you classify that as $1 of revenue, right? So if I do $1,000 swap from BTC to USDC, your revenue on that is $1,000. But then
I was just gonna ask, what's their net income then?
yeah. So I'll get to that. But that's how it works. So you got to take that, and then you do the cost of trading, where you basically put how much you give to the user, right? And then you just keep the spread. So I'll go down the list because I've written this down. Revenue is 16 bill. So the trading is 15.5 billion of this, right? So you'd assume that this is like the huge thing that drives revenue. But if you take only the net that they do, the spread, they earn around 34.5 million from this. Then you have staking. Staking is also like very standard model. But again, how you account for this with the accounting principles, you take the full amount, right? So if you earn 3% on like whatever staked amount, you take that as a revenue. You subtract staking, the amount you pass through, and then they have like 40 mil of that. And then subscriptions and services, this is the stuff for like their custody and all the other things they're building into, is around 114 million.
Okay, so not $16 billion.
Okay, so a couple $100 million in annual revenue, and like from your POV, the growth options seem limited, right? They did not land on ETFs. I don't know, how is the staking world looking today? I would imagine that might be tough as well. Like centralized exchanges and some of the larger players there that you mentioned are doing some of that in-house now as well.
Also, emissions across all blockchains are starting to go down further and further, right? Like they're trying to reduce emissions as much as possible. So I can't imagine anyone is making a lot of money on.
Yeah.
Like, think about how many validators there were on Solana a year ago versus now, because they keep talking about we're going to cut it out, et cetera, et cetera. I can't imagine like they're making a lot of money on that. I also can't imagine a lot of people staking through BITGO. To be honest with you, maybe I'm just because who are the other custodians, Shonda? Like who are they competing against? It's Copper, right? Fireblocks.
Yeah, like Fireblocks, Coinbase, Anchorage.
Have you looked at their growth? Is it like? Sorry, I kind of stole Danny's question. Danny, finish up and then I'll ask.
No, why do you do this? Just Ask the thing, dude.
How's their I guess like growth story compared to the other ones like Fireblocks, Copper? I imagine Coinbase is growing the quickest.
Yeah,
That's what I'm
so when I try to compare to them, I feel like there are not many public companies that have the information that I needed to make the comp. Yeah. So I just looked at Exodus, which is basically the same thing, like a retail focused wallet. But so let me get back to the staking point because it's pretty interesting and something that I also highlighted as kind of a reason to be cautious when we wrote about it in September, is that the staking concentration had like 70 to 80% was in Sui, right? So they had kind of a deal with the Sui Foundation and they custody Sui. So because of that, they had this huge revenue from Sui, and we highlighted that and we said that that's a huge risk, right? Because basically the way that it works, the way that their finances are structured is they're subsidizing the operations with their trading and staking line. So just by itself, the operations would be like at a loss, but you have this like staking and trading, which is basically very low. It is low margin, but it's low cost, right? You don't need to hire anyone to do it. You just get that passive income. And then we saw that in the new filing, their staking is down around 40% from Q3 to Q4. So from 28.6 billion to 15.6 billion, just because of this Sui concentration. So you have kind of this risk. Like on one hand, your more operation intensive stuff like subscriptions is harder to grow, right? You need to reinvest. You need to hire people, and then this other line of trading and staking that kind of subsidizes that is very cyclical and it depends on the market.
Yeah, Sui is down 50% from where it was Q3 of last year, so that makes sense, right? The tokens come down, the emissions from that, the take rate on the emissions from that staking are going to be down as well. I'm not sure, Bach, like you kind of mentioned it, right? Staking rewards in general coming down across the board, like that feels like a really tough business to continue in, especially as we're seeing, I don't know, it's not like 2021 where you've got, there's still new blockchains popping up here and there, like, maybe Monet is a new client or, similar teams to them, but that space seems to be shrinking rather than expanding.
Yeah, in general, like staking is a really difficult sector just because of margins. And I've written about like two LSTs recently. I wrote about EtherFi and I wrote about Kinetic. And the thesis for both of them is basically they're expanding from just staking to something else, right? And I think that's also what BitGo is trying to do. But for now, they're still kind of like protected and insulated from losses by these two revenue streams, which I think there's another interesting thing to mention, and you only kind of see it when you like go deeper into the financials, right? Which is they have like pretty good profits each year, but those profits are flattered by non-operating profits, right? And that's just like revaluing digital assets that you hold on your balance sheet and counting that as a profit, right? So if you look at the operations in the last 3 years, they were negative, like minus 74 mil, minus 36 mil, minus 7 mil. And this is the first year after like they're OGs, right? I mean, they've been around since like 2013 that I could find that they're actually going to make like operating profit. And again, it's an operating profit of like 2.6 mil over the year. And then you think about the fluctuations that can happen in staking and in trading, and you realize like any swing there, like minus 20% in Sui or minus 20% just in general trading demand. And again, they're like under the line.
Yeah,
Gotcha.
and there's also like two issues here. One is, well, actually, one of them is positive. I think staking is quite sticky. Like people don't move around after they stake through one party. So I imagine that like decrease will be 3-4% max of people unstaking. Like the net amount of tokens. Price is obviously not particularly good. The other thing is they also like if they are clipping whatever, like let's say Sui pays 2.5%, they charge 50 basis points on whatever the commission that. Do you get what I'm trying to say? Like whatever the amount of money that they give back to users as staking rewards. Sui gives back to users as staking rewards. They get 50 bips of that, or let's say 10 bips of that. They also can't sell that. I don't think they can sell that, right? Or like they can't sell it immediately because it's just a bad look with the chain, right? Like, is this? Do you know what I'm trying to say? Like, if I'm earning rewards,
I get
in
what
Sui-
you're saying. Like, then they're not going to give it to a custodian that they know is just going to dump 10% of the staking rewards, right?
yeah, like
I don't
I
know.
wouldn't imagine like, Danny, you run a chain, I come to you and I say, hey, like I want to be a custodian so that people can stake through me. And then you're like, okay, that's fine. And then I just sell all of the rewards that I ever accumulate. You'd be like, what the fuck? Right?
Would you? That's the whole point of, isn't that the point of the inflation rate?
To
Is
us,
for
yes.
validators to fund their operations.
To you and I, yes. But like, I don't know. This is just a gut feeling I have.
I get your point. Like maybe as part of this deal, there's some, they could have some stipulations on how and when they stake the tokens, especially if you said that some of they adjusted some of their revenues based on changes in valuations of assets that they hold. So maybe, but I don't know. You could maybe be liberal or conservative in how you look at the numbers there, and like say maybe they sell all of them immediately, or say that they sell them all 6 months later, and that'd give you a range. I guess the bigger question for me is just like, how do you win? Like if you're BitGo here, like what do you grow into if it's not staking? If Coinbase is winning the ETFs, like what do you need? Do you need to get all the smaller ETF players? Like what's the win condition? Is it something else entirely?
I need to look into how. I imagine that much like all other, like we just had this example in HIP-3, right? I imagine a lot of those ETFs are very top heavy, and the bottom ones either have super low commissions for custody people. I don't know what it's officially called, because they're trying to do some form of their own growth mode. Does that make sense? It's like,
yeah,
I imagine the pie is too small, is basically what I'm trying to say.
It could be, but still, if there's going to be a lot more of these products onboarded, even if they're small, I think you'd like to, like, it would be great if you can't be BlackRock and service them, then it'd be great to service everybody else, even if you have to do it at a lower cost, or lower sales price, like per dollar. You know what I mean? I don't know if that's really the play, or if it's outside of that, if they find some other way, qualified custodian services to somebody else.
Yeah, so the thing is, in terms of their growth plan, they have just built out into a ton of different verticals. So they're doing everything from like they acquired like BitGo Tax a while ago. They have tokenization, they have stable coins. They're basically offering like institutional services to anything you can think of. And the upside would be that like these things just stick, right? Like you say that in a bull case, the subscriptions and services, they've grown 50% year over year for the past 2 years. So they are growing well, they are growing fast. You can make the argument that if more and more institutions come, they need more and more institutional services, and that BitGo is positioned to basically fill that gap. It's just the amount that you're paying for that at the current valuation, looking at historically that they've basically not made an operating profit until this year, and how cyclical the business is because of the trading and staking line, right? How much of that depends on just the market being good? That's the downside, right? So you just need to, you think at the current price, is that worth paying for?
Yeah, I do think that if you have tokenization platforms and if you allow custody of those tokenized assets, that's less cyclical than crypto is, right? Like, because crypto goes through this massive boom and bust every 4 years, 5 years, whatever it is. Versus like if you allow people to tokenize, if there's enough tokenized copper, and if the end goal is all settlement happens through crypto and blockchain rails, and as a custodian, you can provide access to this, that's actually pretty big. I'm just like, I don't know how differentiated the four off the top of my head are, like Coinbase Prime, Copper, Fireblocks, BitGo, and I also there's no, let's say there's like limited differentiation. I don't know why Coinbase wouldn't just end up winning that out, right? Or like typically, if like I know somebody from a fund, I think they typically use Fireblocks versus like BitGo. I haven't really heard of it that much, although I don't have a lot of friends in funds or a lot of friends in general, so I'm not sure.
Yeah, I mean, like, I would say that's a fair argument. So let's take one example of like their stable coins, right? Because they do stablecoin issuance. They did USD1. Think about it from the perspective of like an institution that wants to launch their own stablecoin. How many options do they have? Right, they have a ton. So because of that, it's just structurally like really low margin. You just compete by giving away the majority of the fees to the partner you're working with. Like that being said, there's not a world. There is a world where this works out, right? There's a world that they can just capture the subscriptions. It continues to grow. Eventually, they don't need the basic subsidized cost from the other two lines, but it's going to be hard.
I do think this it's down from the IPO, but this crypto equity appears more favorably priced than some of the recent companies we've seen go public. And also, I think maybe to a conversation from the chat last week, Noah and James were going back and forth a little bit. I do think Noah Hedge was an interesting point here about, there's a chance they could get acquired. It's trading under 2 billion market cap today. If the expectation is maybe some of these much larger like TradFi players are coming into the market at some point, maybe an acquisition makes sense at a nice price above where it is today. But yeah, I don't know. It doesn't appear awful, but I do agree with you that the revenue statement today, yeah, you're playing with some fine lines, but it's not as bad as like Gemini was just, I mean, they're losing money hand over fist, launching at an absurd valuation, down only chart. This looks much more appropriately priced, at least.
Yeah, so the thing is, when we did our like initial report, which was based on the S1, we basically anchored the valuation. This was before there was any pricing, right? So it was kind of a question: can we come up with a valuation estimate that would be like reasonably priced? And for that, we anchored it to the most recent round that it raised, which was 1.75 bill. So my assumption was that they're gonna have to raise above this. They're not gonna want to raise less in the round, and that ended up being correct. Like they raised at around 2 bill, but just that pressure, I think, to launch at that valuation was just undeserved, right? They didn't deserve that high of a valuation. And you can make an argument that now, like after the IPO, they're more fairly priced. One more thing that I think is like worth mentioning, especially because we're all tokenomic experts, we know how it feels to get dumped on with like FDV and investors. Of the amount that was raised in the IPO, 11.8 million shares were tradable right after the launch, but there's still 103 mil that are going to be locked up for 180 days. So it's like a very the float right now is very little compared to what is going to be released in the market.
Okay, Danny, unless you have anything else, I want to switch over to Kinetic. No, are we good? Okay, this is just gonna be Shonda again doing his victory lap. I guess like we're gonna do this one really short because listeners don't have over an hour. We published something on Kinetic the other week. What was the vision here, Shonda? Was it purely that they're going into a new market that they can make more money on, or was it you thought that this was hyper liquid beta? What are we looking at here?
Yeah, I mean, so it kind of ties in well to this point we're talking about of staking being structurally like a low margin business that you want to kind of use to build your moat and then get out of as quick as possible, right? So the time when we started coverage of Kinetic, it was still only an LST. It didn't have any revenue streams that actually flowed back to the token, and the only way that they monetized was when you withdrew and when you converted K hype back to hype, they took a 10 basis point withdrawal fee. Um, and during the launch, when they had the points program, obviously that was very lucrative for them because they have a lot of churn. But obviously, a LST after a while it becomes sticky. There are less withdrawals, so that revenue basically just peaked and then dropped down. So from a revenue perspective, it looked pretty weak, and it also looked like there was no value accrual back to the token, right? And I feel like at that point, when the market prices it as that, it's like being priced as a LST that has declining revenues, which has no revenues flowing back to the token. Then you look for like what can be the inflection point, what can be the catalyst for this to re-rate. And I think they published KIP-2 or KIP-2, like a Kinetic Improvement Proposal 2, in like late December, which kind of like explicitly formalized the vision of what Kinetic was going to do and how they were going to move beyond just the LST to basically this like layer of hyperliquid. And in that, they formalized that they're going to use the revenues explicitly to buy back Kinetic. They're going to launch the markets, and 90% of the revenue is for Kinetic. Only 10% is earmarked for KM Hype. And then yeah, that was around it. And then you look at the tokenomics, and there are no unlocks for like a year, right? So that was kind of my thesis that Kinetic is going to re-rate from this LST that has no value accrual into this basically ownership of Hyperliquid Exchange. And there's like probably not many better positioned to execute on this than Kinetic. And I think that played out like pretty well. Everything from like the day one volumes to the re-rating to that being a catalyst was pretty spot on.
I don't have much to say because I've already read this report. Danny, do you have any questions for Shonda, or should we wrap things up?
Yeah, so I guess you're looking into the past in terms of that report and that recommendation. What are you thinking now? Has anything changed? I mean, it's had a good run up. So where's your head at?
Yeah, so it's kind of a contradiction always of like you want to let your winners run, right? On one side, I would say obviously the investment case isn't as clear anymore, right? You could say that now you're buying at an elevated valuation where these things have already been priced in, right? So before you bought Kinetic, when it was priced as a LST, what's the downside? There's not much downside, right? It can convert to a HIP-3 market deployer, and people are still going to price it as LST, and it's going to remain at the same valuation you bought. Now you can make the argument that people are buying it as at the valuation of a HIP-3 deployer that's going to be successful, and it doesn't always materialize that easily, right? So I think they have an explicit points program, so probably they have some volume which is inorganic, right, compared to the other ones that don't have explicit points. Can make the argument that now on a if you look compared to the volumes, it's overvalued, but it's always a trade-off, right? Like, so you have on one hand this like hyperliquid beta, and I feel like hype's going to do well. On the other hand, it probably is overvalued now. It had a huge run up. It's pretty illiquid. You need a jump up in revenue to justify the price. So it just becomes a personal decision. But yeah, like the thing is, I feel like there are a lot of, especially in crypto, because the markets are so inefficient, there are a lot of times where an opportunity is almost obvious. You just need to like look at it and make the case clear. I don't think it fulfills those criteria anymore. I don't think it's obvious long, but I still think it could be good exposure if you're, especially if you're bullish on like equity perps. It's the only liquid token on Hyperliquid.
As somebody who's seen Shonda join the team, I will say he's increasingly become more and more diplomatic in the way that he states what he wants to say. as a clear long, it doesn't fit that criteria perfectly anymore. Okay, very good.
Hey, that was well said. I
that
like
was
the
well said.
analysis. Maybe the follow-up question there for us to close it out is, I've seen a lot of people making the comment, maybe wisely, maybe foolishly, I don't know, that once the metals rally is completed, Bitcoin will pump and crypto will be back on top.
Who said this?
I've seen a lot. It's been all over CT. I feel like the 1000X guys have talked about it. Do you think that's the case? Is if you think that you know this is hype beta, then you have to have hopes that the market is going to continue advancing from here.
Is this for me or Sean? Because I can give you my thoughts.
Either one.
I think Bitcoin is a beautiful asset purely because it can be made to fit into whatever narrative we decide. And one of these narratives was inflation hedge. Didn't work out. One of these narratives was like it's a hedge against overreaching politicians or like instability in countries or central bank authority and whatnot. Clearly, gold is a better hedge against that. So far, we've seen. But the beauty of crypto and Bitcoin in general is that it can actually fit into a whole lot of things. So we'll come up with another reason. I imagine a lot of things from now on come from settlement, unless like from whatever we've decided so far. I think in general, if you like kind of squint your eyes and you take a look at what the market is appreciating right now and what like people are looking into right now, you can see these glimpses of how the market, how like crypto in general is changing from the bottom up. I don't know though. Like you legit never know. We adapt so quickly to new market regimes that it might just go up, and people will just associate that it's going up with metal stuff. I don't think it does, and I think like ignoring gold and silver, I think like copper is a very different story compared to, because it's not a precious metal. So it's just going up for completely different reasons, and so are like lithium and uranium and stuff. So I don't know. Not a very good answer, but you get the gist.
Yeah, I think I would tend to agree with you. I do think I'll shout out Forward Guidance Podcast and Tyler on there. I think he likes to bucket a bunch of things together and refer to them as like these frontier assets. So it's like AI stuff, Bitcoin, like the space companies. Like I feel like it kind of fits into that bucket where it's just one of these bets that maybe younger, more risk on investors are piling their money into. And a lot of those things, like if you look at NVIDIA stock, it's flat or down since middle of last year, and that's kind of where Bitcoin has been at. It seems to kind of really fall in line with a lot of these other kind of like tech or like advanced or like frontier tech plays as well. So maybe that's a correlation that will continue to hold true. Maybe it'll break out from that and we'll find a new narrative to talk about it, like you said. But that does seem to be the case right now, at least.
Sean, to speak your mind, what do you think? Is Bitcoin up next?
Yeah, I mean, the thing is, right, when you have a market with no fundamentals, you need narrative to drive price. It's a shitty narrative, right? I mean, does anyone actually believe that people who long metals are going to rotate into Bitcoin? Like, I don't think so, but we need a narrative, right? It's what keeps us running.
The
What's
thing
interesting is people say you need a narrative to drive price, but I think almost always price drives narrative. So what is driving the price in reality?
I will also. This is a good question, and one that we probably shouldn't spend too much time thinking about because we might not like the outcome. But one thing I will say is, like Noah mentioned in the chat today, is the beta for, or like the secondary, tertiary going up asset for gold isn't Bitcoin, it's silver, and then also it's like gold miners, and then it's junior gold miners, and then it's like palladium and shit. It's not like the immediate thought process isn't to go from like, oh, gold, what's another like cypherpunk asset? Oh, it's Bitcoin. it's very much like I feel like they're gonna go down the precious metals list, and then they're gonna go down the precious metals miners list, and then they're gonna go down the precious metals miners junior list, like the mid cap, small cap ones. And then I don't know what they'll do. Maybe they'll go into picks and shovels, and we're going to like whatever's building the machinery. So we're buying New Case Holland and shit. It's a rare agriculture reference. I think we're good. You can speak. You can still speak, Sean. Then no one's gonna get upset at you. Buddy.
Yeah, so I was gonna say, like, on that, like how you say bets just keep getting increasingly degen in terms of like metals. I remember a conversation I had with Sam, who's one of our analysts, and he told me about like when stuff goes crazy in heavy metals, like what people do is they'll be like 3 guys and they'll fund a mining exploration company. So they'll just like buy a shovel and like dig a couple holes around in different parts, and then they get publicly traded, and they basically that's like their altcoin, right? So instead of like creating pump fund coins on memes, it's just like 3 of us, we could do it. Let's go to Australia. Let's get some mining equipment. We'll do a mining exploration company, and we'll go tradable.
Now, one beauty of, and Kobe talked about this, is that one beauty of these mining things is that because of ESG and environmental regulations, it's very difficult. Like in crypto, if Danny launches a coin called, let me look at the books he has behind him. I can't figure anything out. Anyway, whatever. Let's say he launches like Danny Inu coin. I can't launch Danny Inu 2 coin. In crypto, I can launch that, but in mining, you can't do that because, do you know what I'm talking about? There's environmental regulations. People can't just like go ahead and launch an exploration company, no matter what Sam says. Do not listen to Sam.
So we actually got to get him on the podcast. Like every time we talk about metals, I feel like, dude, this guy was a metal analyst. Like bring
that's
him
true.
on.
We should actually get him on the podcast. No, but do you know what I mean? It's like,
well, I think you can launch a company if you don't actually do any of the work, right? You just say that you're an exploration company, and then you don't actually do any of it.
Yes, and I think the thing about like exploration companies, like in general, the likelihood that you'll actually find metals in the place that you're digging is so low that you don't actually have to do any work. You just like dig a few holes around, and like people like who are trading you have no idea have you actually gone and dug properly, or have you just like set up your bulldozer and just sat around.
okay, we have somehow figured out how to scam people in mining as well. Next up, healthcare. Okay,
Yeah, crypto definitely wasn't first to scamming, so it's just been adapted from other models in the real world.
But we did it at a much larger scale for some time, and we did it really good. Okay, well, to our listeners, I appreciate you if you're still coming to the podcast to listen. I know that the market is semi-dead and nobody really wants to hang out with us, but if you're here, I love you and thank you for coming on. And to Danny and Shonda, I appreciate you, as always, for coming on and speaking.
Thanks for tuning in.
Thanks for having me, guys. See you.
Peace.